RSI indicator goes in the opposite direction and prints higher lows. So as you can see right here, the RSI printed one low and then a higher low. This right here is the bullish divergence, and the opposite is true for the bearish divergence. So for the bearish divergence, the price prints higher highs, right? So we have one high and then a higher high, while at the same time the RSI goes in the opposite direction and prints one high and then a lower high. And you may of course wonder, why is it so important to know about divergences? Well, the reason for this is that the bullish divergence actually indicates a potential reversal here towards the upside, while the bearish divergence indicates a potential reversal to the downside. And uses divergences to predict reversals in the market is one of the best ways to use the RSI indicator. Many people focus mostly on, overbought and oversold conditions, but many times that doesn't work at all. Experienced traders tend to focus much more on RSI divergences, and knowing this information will be important throughout the rest of the video. But now guys, let's take a look at our first So let's start here by going up to the indicators tab here and search for RSI. RSI stands for Relative Strength Index. So let's open up this indicator right here. And as you can see, now the RSI indicator appeared here at the bottom of the chart. Now let's go down here to the bottom left corner and press on the settings tab. And we can actually start here by unchecking the RSI based moving average. This right here is basically a moving average of the RSI indicator itself. And while it is possible to use the RSI-based moving average on some trading strategies, many times it's much better to have this one unchecked. Now, however, let's go here to the inputs tab and take a look at the actual setting we want to change here. So we want to go down here to where it says source. And as you can see, right now it says close right here. And close basically means that right now the RSI indicator will base its calculations on the closing price of all the candlesticks. But we can actually change this. So let's open up this bar right here and go down to where it says OHLC4. And we want to choose the OHLC4 here. And you may wonder, why would we want to choose this one? Well, OHLC4 basically stands for Open, High, Low, Close. And this will make the RSI indicator base its calculations on the opening price, the highest price, the lowest price, and the close of the candle. So this will basically make the RSI indicator much smoother here, and it can provide clearer signals, which can be especially useful if you are a beginner trader. So let's choose the OHLC4 and press OK. Now guys, as we can see here, remember what we recently talked about? We talked about divergences. And as you can see here on the chart, you can see that the price, we printed one low right here, then the price printed a lower low, and we printed yet another lower low. But if you change your attention here and take a look at the RSI indicator, you can see that the RSI actually printed one low, but then a higher low, and then yet another higher low. So in this case, we can see that the price goes in one direction, the RSI indicator goes in the opposite direction. This is what we call, remember, a bullish divergence, indicating a potential reversal to the upside. And as you can see, after this divergence appeared, we indeed saw a strong movement here towards the upside. And by using our current settings, the OHLC4, this signal right here can actually be easier to spot. So let's show this by going back here to the settings of the RSI. Let's move this one to the side right here, and let's go back here to the close. Now when we choose close here, you can see here that it's still possible to spot the divergence. You can see we printed lower lows while we printed higher lows. But by using the special setting, let's go back here to the open, high, low, close. You can see that we get a sort of much clearer signal. You can see we have much smoother signals here, and this makes the RSI divergence easier to spot. Now guys, it's time to take a look at our second setting for this video. So now let's go back here to the RSI. We go to the settings tab once again, and now I want to take a look at the length setting right here. So So as you can see, the standard length for the RSI is 14. And this basically means that the RSI indicator uses the past 14 candles to use its calculations. So if you want the RSI to be more responsive and move faster, we can actually shorter this length. So let's actually reduce the RSI length by half here and choose 7. And you will be able to see, let's press OK. When having a shorter length on the RSI, you will realize that changes in momentum, so when the price starts changing here in speed or velocity, this will lead to much faster changes here on the RSI indicator. And many times by using a shorter RSI, these kind of divergence signals can be even clearer. So for example, right here, now you can see that we had a very clear, low right here, very clear lower low, and then yet another lower low right here. However, guys, it's important to understand what this setting means. So let's go back here to the settings once again. So if you, for example, choose the RSI setting to just a short length of 2, this basically means that the RSI indicator will